What's up, everybody? It's Crendelacremeinvestments, and one is back at you again with another video. And today I'm going to be discussing how to identify trendline liquidity. And personally, the way I say trendline, or I don't even know why I just said trendline, but liquidity overall, how you identify liquidity. And personally, how I identify liquidity is in three ways, and in three ways is shown right in front of you here. So go ahead and take a screenshot of this because I'm going to delete it later because it's just a jumbled mess when I show you a lot of examples on the charts. But yeah, this is essentially how I identify liquidity in these three ways. The first one is probably the typical pattern that everybody's kind of used to seeing, the equal highs, equal bottoms, W patterns. And then you have trendline liquidity as it creates, as I call them, baby highs or lows, or swing highs or swing lows. On smaller time frames, and on the bigger time frames, it'll usually come and let me see if I can kind of draw this real quick. Kind of sweep that liquidity and then take off. And then the next type of liquidity that I don't know if a lot of people look for or use is swing highs and swing lows, meaning if it's in a trending market, that next high is liquidity, or that next low, if it's down, if it's a downtrend, the next low, if it's uptrend, the next high is liquidity. Usually it will retrace after that to maybe the 50%, or maybe even lower, 7.8 or order block down there, and then take off in its intended direction. So go ahead and screenshot this, write it down, pause the video, whatever you need to do. This is essentially how I personally look at liquidity and how I get active in the market. And if you can compare these with other institutional moves and levels and concepts, it's very powerful, very powerful. So go ahead and take a screenshot of this. If you need to, I'm going to go ahead and delete it. If you need to, just go ahead and pause the video. I'm trying to make this video nice and quick because I know a lot of people just like to get the information in and out, and our attention spans nowadays is not up to par. It is not meant to be held for a long time, including mine. So I like to get to the base of the information and get out. So that's what I'm trying to do for y'all today. So alright, so I'm actually going to show you in forms of trades that I'm looking at until next week. So you get actually a little view of my trades that I have coming up, and how to use that and compare it with what I just showed you. So so we did have these equal lows right here, but usually when you have these equal lows, it turns into some kind of breakage structure. So or it does turn into a breakage structure. So we did have this liquidity right here, and this would be the equal low. So knowing that we're in a overall downtrend, you also have this liquidity up here. And the thing is, liquidity is going to be everywhere. Liquidity is everywhere. You just get that. There's no point where liquidity is not going to be on both sides of the market. It's always going to be on both sides of the market. But what you have to do is compare it with market structure and other institutional levels to know which liquidity that can be targeted first, that has the higher probability of being targeted first. And just by doing that is just knowing market structure, essentially. But all liquidity is magnets. Just think about liquidity as magnets. That's just where the market wants to go and will go eventually, even if it's on a big time frame. So just like I showed you with this liquidity up here, it as you can see, it just kept making higher highs or lower lows and lower lows and lower highs, just like that. And it didn't come back and get this liquidity. However, we do have a daily order block up here. So we do have these lows down here. So after it sweeps this liquidity, it could come back and tap into this order block, sweeping that liquidity, resting right above there. So like that's what I mean by it's always going to be liquidity on both sides of the market. However, I won't be looking to target that because it's made that new lower low going with market structure. So my next target, since it looks like it might break these lows, starting when New York opens later today, or just not New York, but when the market opens later today, when Asian session opens later today, probably sweep this low, and that as it usually sweeps a low or sweeps liquidity, it usually retraces back to another institutional level or institutional point, and in this case an order block, to then continue down its path. I wouldn't target up there until I get some kind of confirmation that it wants to keep going bullish and breaks through all this structure up here. Okay, And with that being said, it's also the trend line liquidity here. So let's me do this right here. We have trend line. You can draw it from here, or you can draw it from. It's not what I want to do. From here. All right, y'all see that? So you have trend line liquidity right here. So meaning that we have this trend line liquidity on a smaller time frame. See better on a 5 minute. On this trend line liquidity on a smaller time frame. Like I said, you could draw it from here to here. And the easiest way to really identify trend line liquidity is just if it's too clean, if it's too good to be true, it usually is. You know what I'm saying? It works the same way for trading. So if the trend line is just really clean, it's most likely going to get taken out, especially if it's on a lower time frame. So with that being said, we know that liquidity is just magnets in the market. And since we're about to sweep a low, since we want to retrace anyway to this order block, we have this order block and other institutional levels up here as well that I've discussed on my YouTube. I'm not going to discuss them in this video for the sake of the video, the time video, but we will be sweeping this liquidity down here. So we're already in mood for a retracement. So, and then we have this liquidity up here. So with all those other confluences put together, we know that we have higher probability of coming up and sweeping this liquidity to play a level up in here and then get some sales down, possibly. All right. So that was pretty much a demonstration of trend line liquidity, and we had some equal lows, equal high liquidity in there. But and this is a trade that I'm possibly looking for EU. So like I said, we have swing highs and swing lows as also as liquidity. So we have this liquidity resting right here. All right. So like I said, with that being said, and since we're overall in a downtrend, the next point of liquidity that I want to target is this. However, we can't just say, all right, well, I'm just want to sell right now. So we have to match it with other institutional concepts in order to target that liquidity. So we can come up in here, get some kind of Wyckoff formation distribution to target this liquidity down here at that swing low. And it also has another form of trend line liquidity right here that it swept, as you can see right here. All right, and just kind of train your eyes to see those three different patterns. So swing highs, swing lows, trend line liquidity, and double tops and double bottoms. Because it's honestly everywhere. Like you just go through the chart and literally and it's always on both sides of the market. Always on both sides of the market. So, but with that being said, that's how you'll use other institutional concepts to target that liquidity. Because like I said, all liquidity is magnets. All it is magnets, and you can either get in after it sweeps that liquidity, or get in before to target that liquidity. And that's essentially how, or reversals or continuations. That's essentially how you can look liquidity and get active into the market. And the last example, I think it's on SP 500. I've actually been looking for this trade for a minute, but here we have the typical equal highs and equal lows resting right down here. All right, and overall we are in a uptrend. As you can see, it's the indices. Indices are usually 99.9% of the time are moving in an uptrend. It's ugly uptrend. Do that again, just for the sake. There we go. So maybe come here, sweep that liquidity, and then continue on this uptrend. But how you can do it is like I said, liquidity is just overall magnets in the market. So I'd eventually want it to come sweep these equal highs and equal lows down here, since it looks very clean. I mean, this is actually a setup. So I mean, and this is the next swing low as well. So this is a free setup if y'all want to actually I'm putting this out before. I'm probably put it out later today, so this is a free setup if y'all want it. But that's neither here nor there. But so we have these equal highs, or equal lows in this situation. Oakland has equal highs, but we have these equal lows in this situation. So with that being said, we know that liquidity is magnets. So we want the market to be pulled into this direction and sweep it. And as we look right below that liquidity, we have another institutional concept with some imbalance in the order block down here, and also an institutional move with some more sweeps liquidity down there on a smaller time frame. I'm just going to stick to the hour for the sake of this video, that we can see that it wants to come, possibly sweep this liquidity, and then keep going on its bullish trend. All right. So takeaways. The patterns are the swing high, swing lows, equal highs, or trend line liquidity. If it's trend line liquidity, make sure it's more so on the smaller time frames. So like even this is trend line liquidity right here. See, and also equal highs, equal lows. But it swept at the trend line liquidity, made more liquidity down here to come probably sweep it again and then trend. But yeah, swing high, swing lows, trend line liquidity, and double tops, double bottoms, and think of liquidity as just magnets, and compare those magnets with market structure and institutional moves, and then you can see where you want to end up in the market, so where you can have a higher probability of targeting that point to get the best entry and also the best risk reward for your trade. And that's essentially smart money concepts in a nutshell. But yeah, that is essentially how I personally look at liquidity. And I find it very helpful for me how I look at that, and then how I can compare it with other institutional concepts to make the best of the trade. I wouldn't suggest just trading strictly off of liquidity, but liquidity is very powerful when you match them with other institutional concepts. But we are coming in at 11 minutes on this video, so I'm going to go ahead and end it there. Hope y'all enjoyed that. If you have any questions, hit me up in the comments or just DM me, whatever. If you want any more in-depth learning, go ahead and purchase my ebook. That's money. Or you can join my group on the Discord, and checking in on my live streams if you choose to. But or just keep enjoying the free information on YouTube. I know YouTube definitely helped me out when I was coming up, so I do want to give back in that way. So appreciate y'all. Crendelacreme is out.